Hello, my name is Maor Shapira, and along with my teammates Takuma Ohashi, Tess Dual, and Kathleen Morgan, we are here to present to you our equity research report for Bristow Group Incorporated. Our report date is November 7th, 2014. The following will be included in our video presentation: our valuation, a company description, management background and site visit report, an industry analysis, a peer analysis, the risks associated with the helicopter industry, and our investment thesis. We will start with our valuation of Bristow and our 12 months target price. We valued Bristow as market perform based on our 12 months target price of $73. To arrive at our target price, we used 4 equally weighted valuation methods. We used price to earnings, enterprise value to EBITDA, enterprise value to sales, and a combination of discounted cash flows and dividend discount models. Bristow Helicopters was one of the early suppliers of offshore helicopter services in the United Kingdom. It is also a supplier of search and rescue services and of military helicopter pilot training support in the UK. Bristow Group was formed in June 1953 when Alan Bristow changed the name of his company from Airwhaling Limited. Bristow primarily operates in 2 segments: helicopter services and production management services, with helicopter services conducted through 2 regions and 6 business units. Bristow Eastern Hemisphere regional headquarters are located in Redhill Aerodrome in Redhill, Surrey, England. The company's Western Hemisphere regional headquarters are located in Houston, Texas. In 1996, Bristow Helicopters was purchased by Offshore Logistics, an American offshore helicopter operator, and was structured as a reverse takeover. The group now operates and maintains a global fleet of 490 aircraft. The Bristow Group expanded their portfolio in April 2007 with the purchase of Helicopter Adventures, a Florida-based flight school. Helicopter Adventures was subsequently named the Bristow Academy. Bristow at a glance. Bristow has a market cap of $2.479 billion and an enterprise value of $3.003 billion. Bristow's 2014 year-end revenue amounts to $1.67 billion, and its net income to $187.8 million. Its capital expenditure to $628.6 million, and its cash flow from operations to $232.1 million. With over 4,000 employees, including nearly 1,000 helicopter pilots, Bristow has operations on every continent. Bristow Eastern Hemisphere provides helicopter transportation services of predominantly medium and large helicopters to the oil and gas industry in Europe, Africa, Asia, and Southeast Asia, including Australia. Bristow Western Hemisphere provides helicopter transportation, production management, maintenance, and other support services to the oil and gas industry throughout North and South America, including the Caribbean and Alaska. Bristow's management team is a group of highly experienced and diverse members. Each member has extensive experience in various fields prior to joining Bristow, and this diversity is an asset for the company. However, Bristow has made significant management changes in the past year. Jonathan Bailiff was promoted to CEO in February of 2014 after William Childs retired. Additionally, Bristow hired John Briscoe, Jeremy Akel, and Chet Akiri to CFO, COO, and Chief of Corporate Development positions. A new management team suggests uncertainty as to whether Bristow's operations will continue forward in a similar trajectory. The CFO position has been a revolving door in the past several years, and this high turnover rate may suggest an inconsistent financial strategy moving forward. On Friday, October 3rd, 2014, our analyst team visited Bristow's facilities in New Iberia, Louisiana. We met with Linda McNeil, the Director of Investor Relations, Andrew Pape, the Manager of Investor Relations, and Robert Phillips, the Director of Bristow's North American Business Unit. Phillips talked to us about Bristow's 2 main differentiating factors. The first is the company's helicopter availability rate, an impressive 99.6%. This rate is significantly higher than its competitors, in particular PHI Incorporated. Second, Bristow's Target Zero Safety Initiative is the industry-leading safety program that has established Bristow's reputation as a safe and reliable helicopter transportation company. After speaking to some of the pilots during the site visit, we realized that Bristow was able to popularize this program by allotting 25% of management incentive compensation to safety performance. Additionally, Bristow's goal of leasing 30% of their helicopters is a much smaller percentage than its main competitors, the CHC Group. At the end of our site visit, we were given the opportunity to experience flying a helicopter. Bristow operates in the helicopter transportation services sector as part of the oil and gas services and equipment industry. Oil and gas service providers provide services to E&P companies, and their success is therefore largely dictated by the success of E&P companies. The industry is highly cyclical, largely dictated by fluctuations in oil prices and fluctuations in market returns. Bearish projections of oil prices could indicate we are potentially entering an industry downturn. We chose our peer group based on 3 similar criteria: services and products, industry, and client base. Based on these criteria, we concluded that CHC Group is Bristow's closest competitor in terms of global operations and market share of revenue. The table shows the comparison of each company's market cap, revenue, weighted average cost of capital, price to earnings ratio, price to book value ratio, enterprise value to EBITDA ratio, debt to equity ratio, and return on equity. There are many inherent risks in the oilfield services industry, but we have broken them down into 3 categories: operational risk, regulatory risk, and financial risks. Bristow faces many operational risks. Bristow's revenues largely depend on how the oil and gas industry performs. The oil and gas industry is largely cyclical, and Bristow sees lower revenue during times of lower oil production. In addition, Bristow also has many large client contracts. If a client chooses to use a competitor or another method of transportation, Bristow could be seriously impacted. Other operational risks include Bristow's suppliers and its employees. Many of Bristow's employees belong to collective bargaining groups, and Bristow's supply for the next few years is fixed based on manufacturers' capabilities. The primary financial risk of Bristow is its debt. Bristow faces many regulatory risks operating helicopters. It is subject to FAA regulations in the United States and other regulations outside of the United States. Bristow has attained a reputation for great service and safety that will keep the company ahead of its industry peers. We believe that Bristow will increase revenues to par with CHC as a result of strong earnings projections from new search and rescue contracts and Bristow's significantly lower cost of capital. However, Bristow faces a challenging business environment in the next 12 months. The company's acquisition of a fixed-wing company, a management team reshuffle, and energy industry uncertainty increase Bristow's risk. We see potential for Bristow to make gains by adding fixed-wing aircraft services to its product line and by adding new faces to its management team, but these factors could potentially work against the company.